All right, folks, welcome back. This is our commentary for this weekend, and I'm wondering if I sound a little bit better to you today. The other day I talked a little too much when I was doing my YouTube exposure video on myself. The emails I got from that, they said you need to start doing more cardio. You can hear you breathing heavy. What you don't realize is I have two big old blocks of plastic that are in my jaw, and it makes it sound like I can't describe it. It's just, I'm certainly not going to show you a picture of it, but they're two like plastic brick type things in my mouth. And between that and the two screws that go up into my sinuses, which are still swollen, it closes my nasal passages. And between that being restricted and my mouth being full of these plastic prosthetic things, it keeps me from being able to breathe normally. So as you saw me walk around in the video and talking, it was a little more difficult than sitting here, obviously. I'm not a couch potato by profession. I do have cardio that allows me to move around without breathing heavy, and obviously I don't smoke, but I appreciate all of your concern, but it's just I have all this stuff going on in my face and it makes it difficult to breathe normally. So hopefully when the sinuses aren't so swollen, I don't have to wear breathe right strips constantly just to get air in my nose, then hopefully I'll be able to move around without sounding like I'm gasping for air. Alright, so with all that crap out of the way, the dollar index daily chart here. I zoomed out a little bit. You can see this SIBI sell side of balance, buy side of efficiency. Very difficult to say right now. This is an area where I'm expecting to see the dollar try to reach up into. That might need to be rebalanced. And with that in play, that sets up consolidation to weakness on foreign currency. US dollar hourly chart. Now I liked this little fair value gap here. I would have liked it more had it been still trading this week. Okay, in other words, if it wasn't the weekend and the uncertainty of where we're going to open up on Sunday, I would have liked to see it trade down, come into that a little bit, and then expect it to rally up. That might be what happens, but it doesn't need to do that. So it's one of those, well, if it can get down here and then react, small little fair value gap, order block, bullish or whatever, that might set up a run into that. Otherwise, as long as we're north or above of this fair value gap, we're bullish on dollar index. That's my view on it. Now, if we go down below it and come back up in, then that may act as a level of resistance, and this might need to be traded to at a later time. So this right here is something to watch. If it trades below this, it may act as resistance and then come down here and trade into this area here. Lots of liquidity resting below here. So if this one fails to hold price up and it acts as resistance, that's a nice little rundown in there for about 100 pips or so. For clarity's sake, though, I'm still bullish on dollar. So that way we're not misunderstanding one another. So the small little area in here, watch that. If it just drifts lower, or if we gap down, come up, fill in the gap, and then trade down to that level, that would be something to watch as well. I just like the idea of the price drawing up into here. And how we open on Sunday is, like I said, a mystery. It's never known to me how they're going to open up. And you always have to weigh out your analysis and what it may or may not be doing based on Sunday's opening. Euro dollar daily chart. We have an old high here, an old low, and between those two areas we have a mitigation block right in here. So I don't have that drawn, but we might get a little bit of a reaction in here, which may need to trade up into this area there. I don't like the idea of it coming back all up to here. Okay, so if you look over here, see that little gap? On your chart, I don't have it on mine because I want you to have it mapped out for your charts. But be mindful that we are below this. And if we trade up into it, this area here plus this area in here is essentially like a balanced price range. So we could trade up to the 115 big figure or just short of that if it's got to retrace. And then I would expect more potential selling at that time. It doesn't need to do this, okay? But because of Sunday's opening, not knowing where we're going to open, these are just candidates to watch and study. All right, so we have the euro dollar. I'd prefer, so we are on the same page, I'd prefer to see dollar not go lower, just to continuously press higher. And that would be a heavy weight on euro, and it should keep this high intact and then just roll over. Again, gap down, opening on Sunday, fill the gap, and then accelerate going lower. That's the preferred mode of delivery I would like to see for euro. But if it needs to go higher, I don't think it needs to go that much higher than this area in here. Like I said, the 115 big figure has that nice little gap there. So we have this, and then redeliver, rebalance. So it might need to just dig up into this area here and not touch the old lows. I don't want to see that. Everybody else would expect to see something like that. And to me, it's better for it not to go that deep of a retracement. But certainly coming into here, that's reasonable. And retrade back to the 115 big figure, pick up more liquidity and interest in trying to see a low form, and then just sink it lower on a higher dollar. That would be, in my mind, something that would be a favored type of delivery on price. 15-minute time frame on euro dollar. Nothing really to show here except for nice clean highs in here. So there's buy sell liquidity resting right there. It would dig into around the 114.80 level. And then that 115 big figure, we see it clearly over here on the 15-minute time frame. Again, better if it leaves it open, because that could be useful in terms of measuring gap, breakaway gap, that type of, well, not necessarily breakaway gap, but for measuring gap purposes, yes. All right, pound dollar, daily chart. And we had the bearish order block, trades up into that, and we broke down. All of this in here, this run from this low to the bearish order block, and then lower than this low, and ultimately below that low. This is a market maker sell model on the lower time frame, which is part of, and it's the second level of redistribution of this market maker sell model. Okay, in the mentorship, I have taught that if you're looking for the highest probability trades, the cleanest delivery, the easiest path to, well, nirvana, it's trading market maker sell models on the second level of redistribution when the bias is still bearish. Okay, so what that looks like is this right here, because we had the smart money reversal, low risk sell, distribution, redistribution, and then it sinks it hard, running out the original consolidation over here. So all of this here is one fractal, but inside of this level of redistribution from this low to this high, this is a market maker sell model. And I said it on Wednesday's video. We didn't do a video on Thursday. I said we wouldn't do one. And I stated that if I didn't get it up by Friday, you would have it before noon on Sunday. Okay, so it's Saturday night here in ICT land, so this should be up by around 11 o'clock at the latest Saturday night. But this distribution level here is part of a larger daily market maker sell model, which on a lower level creates that same market maker sell model on a smaller fractal, reacting off of this bearish order block, bearish bias, bullish dollar, sends it lower. With that in mind, here is that bearish order block. You can see it trades up into that. Here is the original consolidation, accumulation, more accumulation, smart money reversal, low risk sell, distribution, redistribution, then sends it lower. Now this is on an hourly chart, and I'm going to flesh this out because I want to teach you what this looks like and why I was confident with that trade in here on the 10th. On the 15-minute time frame, just to get this time frame out of the way, if we go higher as a deeper retracement, notice that we have these relative equal highs and the sell side imbalance, buy side inefficiency. It might need to poke through that and clean up some of this. I'd prefer to leave this area open, and it can trade up into here, and that's fine. Take out some trailed stops here, and then maybe make an attempt to go lower on these lows, again, with the confirmation of a higher dollar. Now let's go back into that hourly chart because I want to teach you a little bit more about the sell model and how you as a trader will learn the price action model 6 and 7, which is the closest thing out of all the models. And when I say these types of things, everybody gets like, ooh, that's the one I want to do. That's the one I want to do. I want to do what ICT says is the closest thing to his personal trading. Don't hear me say these words, and I'm actually tempted to edit that part out, but I'm not going to because I've already said it before. When I'm teaching those models as a charter, you'll hear me talk like that, but it is an unfortunate thing I wish I would have never said because it forces kind of like a lack of interest on all the other models. And that's unfortunate because, again, I don't go in and edit anything. It is, once you have it in your hands, once it's uploaded to the server and the link is posted, I never, ever, ever edit anything. It is what it is. So when you understand how you can work within the market maker buy model and sell models, the holy grail of these patterns is understanding what the pattern looks like overall. Because if you can see the setups forming in the overall market structure, and what do I mean by that? Well, the daily chart, remember this was the bearish order block. In this low, it rallies up into that bearish order block. It does not matter if you've seen this as a sell. It doesn't matter if you sell short there, because this is the smart money reversal. While you're developing, let these go. Anticipate them, and then let the market prove itself to you. We have a short-term low here. The market trades down below it. Bam! We are now set for the sell side of the market maker sell model. That means the market's going to go down. This is the curve, midpoint. Everything to the left of that, this is the buy side of the curve. Everything to the right of this high is the sell side of the curve. What is the bias? The bias is bearish. Dollar's bullish. So if this is going to sell off, why should it sell off? Let's build some narrative around that. Well, we have the range between this high and this low. So from a PD array matrix, equilibrium is here. We did trade above it here, but is in an area where we'd like to see a deep, deep premium. Yes, right there. And we're at a bearish order block on the daily chart. So we wait to see if price wants to repel from that. And if it takes out this short-term low, think about what we have here. The market traded to a premium. The market traded to a premium PD array in the form of a bearish order block during a time when the market is bearish and bullish for dollar. So we have this macro view in line with a potential sell-off. Where do we look? Where do we look for the best setups? In that shaded area, if it trades up into that and it's a PD array that's a premium, that is like a lead pipe cinch trade, to use my mentor's catchphrase from his 1970s book, How I Made $1 Million Trading Commodities Last Year. Your mindset should be, as soon as this low is taken out there, okay, boom, you go right back to this high, and these sellers, which is smart money, are going to attack these lows for the sell side. They sold short here, taking out buy stops there. They accumulated those buy stops in the form of selling short to them. The buyers above here, who's buying above that? Breakout artists, trailed stop losses on shorts. They get knocked out. Look what's going on. We're bearish. We have a short-term high, and then it runs that high. Remember what I taught you. The best, strongest impulsive price moves follow a stop raid. So if we're bearish, we have a short-term high that's taken out, that's a stop hunt. This could be a turtle soup sell for you, or you could be using the bearish order block on the daily chart, or you could be using the optimal trade entry short here. Think about that. Imbalance, consequent encroachment, trading into that could be your setup. How many setups does this give you there? All of them uniquely different, but still working inside of the same underlying narrative and underpinnings of the marketplace. A bearish breaker here, high, low, high. It breaks this low, trades back up into it. There's your setup. That's your entry. There is your low risk sell. Targeting that down there. And if you want a pyramid, you would put a position on in here, say, I don't know, 5 standard lots. Okay. And as it breaks down, it gives you another level of distribution. After the smart money reversal, you have low risk sell, which is bearish breaker. Then you have, we drop down to a from an hourly chart to a 30-minute chart to get more refinement here. That imbalance, look what we're doing. We're back into that, as I mentioned on Wednesday. So that's distribution. This is the breaker. This is all time distortion. Displacement. Back inside of the imbalance. Optimal trade entry as well. So we're back inside of this area of accumulation before it goes up and hits this level. Once it breaks down, you go right back to the left side of the curve. This is the buy side of the curve. And now because we're on the right side of the curve, which is the sell side of the curve, in other words, when everything should be looking for resistance or premium arrays to sell short from, that's this level right here. Okay, so this down closed candle right before the run up, you're matching up the down closed candles over here on the left side of the curve with rallies that go into those same levels on the right side of the curve, which is the sell side. So distribution. So that same level of distribution here, now we're looking at on a 15-minute time frame. As this starts to sell off, we have another level of redistribution. So this one here and this one here are very strong candidates for going short, targeting this level on here, which is that old low, where below it is sell side liquidity resting below the original consolidation. So when you're looking at it like this, if I just showed you this chart here and I said, look at this market maker sell model, without stripping it down from the daily chart to the hourly chart to the 30-minute chart to the 15-minute chart you see here, it would be very difficult for you to see this as a market maker sell model. This would just look like a downtrend. Okay? That's why it's important for you to go through your higher time frames and break them down from a top-down approach to the lower time frame, but understanding where these sell models and buy models are expected to form. If your higher time frame charts are loaded for a bias that's one directional, like cable was bearish and dollar's bullish, if that's the case, what you're looking for is every opportunity for the higher time frames to sell off after running up, like a swing higher. That whole idea is a potential sell model, just like this is here. From this low up to here, this is a market maker sell model. From here to here is a market maker sell model. Even on this little area here, if you strip it down small enough, I mean, it's probably really forcing the issue, but nonetheless, it's still there. So every time you see a swing higher, you expect it to go lower. That is where you formulate the market maker sell model and find where the previous down close candles were used before the market rallied up to create the turning point at the smart money reversals. Every short-term high that returns back to a level of a premium, which was a buying opportunity on the left side of the curve should act as a shorting opportunity on the right side of the curve. Now, for the 2021 group that's in here, what I just stated probably went right over your head, and it's going to feel like, man, you just talked in a whole lot of mumbo jumbo. I promise you, when you get into charter, because all the charter members are smiling because they're like, I get this now. I get it. Because you've seen and learned the lessons around the price action model 6 and 7. This idea of going into the price action and stripping down the elements of a trade setup using the market maker sell model here, it gives you the context to work with one side of the marketplace where the setup should form and when they work towards creating additional entry points. So if you went in with a 5 lot, the next entry could be, pyramiding, a 3 lot once it drops down more. So what does that mean? You could sell short here and it comes back down into this level here. That could be another level where you could sell short 3 more contracts, or 3 more lots rather. You can hear the futures trader in me. And then this is another one where you can add 1. So it would be 5, 3, 1. So you'd have 9 standard lots for a run into this level here. That's how you pyramid effectively. You're not taking a 1 standard lot, then 5 standard lot, then 10. That will blow your account. Even if you're right in your direction, you could still get tagged and hurt you. You want to start with your higher portion, but not maximum leverage. Okay, you want to do like something that's reasonable. Like when my competitive margin is used, in other words, what I'm willing to put on as a maximum, it's 4.5%. That's my maximum risk per trade, 4.5%. I do not always trade with 4.5%, but I did it because I'm going to teach this lesson as you hear me teaching it now. I'm showing effective entry, trade management, visibility with seeing where these order blocks and institutional order flow entry drills, which everybody's buzzing on YouTube. They're like, well, what is that? When you watch that video on YouTube, you, as my students here, understand intimately what I'm doing. And I'm doing it in live data, not some rented server, not delayed data. I'm reading it like a book I've read 12 to 15 times, and I know it like the back of my hand. That's because I'm applying the very things that you're learning here. If you can just sit still for a minute, let your mind sit still. Don't think about nothing. If you're watching TV, if you're writing anything down here, stop and just listen to me for a minute. The thing that you're looking for that's in this mentorship, that is in plain sight, and I say this all the time, but you don't listen, okay? You're not grasping it and understanding the importance of it. I teach the market maker sell and buy models because it gives you the very context to find the highest probability trades, the easiest ones that literally leap off the chart, and they're always there every single week, but not every single time frame has them, but they appear every single week. You just need to know, where's the market likely to draw to. That's where the majority of your time should be spent. Not where do I get in? Because that is the easiest part. The hardest part is for you to learn on your own without me guiding you and holding your hand. I'm here teaching every single week with you what I believe the draw and liquidity is in the commentaries. I give you my experience in that regard. I do not rob you of the opportunity and the epiphanies that will come when you go into the marketplace looking at the things I teach you to look for based on that draw on liquidity. So if we're looking down here on Wednesday as a potential draw on liquidity, that is to mean that maybe that this weekly range is going to create the high on a Monday, Tuesday, and continuation on a Wednesday. Well, it just so happens there's the high of the week on Tuesday at that bearish order block. Then we had the imbalance on the higher time frame that we traded down below, came back up in there. That is what? That's your sell. I stated earlier in the week before Wednesday that if we get below the fair value gaps and come back up in, that's going to be your level of resistance, and we expect selling. Okay? So we have the weekly range ideas that I teach here, and then the continuation on Wednesday. What's it reaching for? The liquidity below that low down here. But you're applying the market maker sell model to give you framework, context to use. Okay, if we're going to go down here, that's well and great. But now you ring in, how do you look for the setups to enter the trade? Where will they form? Well, you're at these levels of distribution and redistribution. When these form, you know that they're returning back to go lower. The retracements and short-term premiums applied to the marketplace by the algorithm that allows informed money, interbank traders that are going to see that and they're going to execute on that. It's not all the traders that usually are 90% wrong are buying here, controlling price up here because they're buying, and they all got smart right here and stopped buying and then went short here. Think about the logic of what these book writers and educators say. The market tops because it runs out of buyers. No, that's not what it is, okay? What it is absolute control. And it does not matter how many people want to buy it up here. When the price is delivered lower, they're going to be forced to stop buying because it's going to keep dropping. It's not they ran out of buying interest. They are ripped apart. And literally, the market goes against whatever underlying buying and selling pressure you think exists. Ignore that because it's a facade. Here's how I realized this, okay? Now here's something you can write down. Not that you can't write down what I just said because everything I just said was really good stuff, but I wanted to talk to you without being distracted by you trying just to keep up what I said. Go back and rewind the video a little bit and then go back and get your notes taken from there. But I wanted to speak to you without any distractions. But when you're looking at markets like commodities, okay, or index futures, they're very volume centered. Okay, those markets, I like looking at volume because you have real volume figures. You ever notice how the market creates, like here, like you get a high, and then you get a higher high. And volume might be really high on this, and then it rallies higher, but the volume is lower there. Why? Why is the volume lower there? Because that lack of new buying is being reflected in the volume. There are times where you'll see there's a high here, which has a high volume. Then it has a higher high here and lots of volume. But I was taught that volume precedes price. And I teach this, okay? I teach this even in the mentorship and the commodity portions of this mentorship. But the times that you see high volume on this high and then higher volume, okay, when I say volume, it's the actual number of trades that were placed during that time. If you have a high with a higher high and the volume is higher on that one, people that just look at volume would see that as, okay, that's confirming the uptrend. And that's what I originally learned. But it's not always the case. That higher volume is just being reflected with smart money coming in, selling into that rally. So when we had this higher time frame bearish order block up here, I'm thinking that volume being high here and higher here or high and lower here is of no importance to me. I'm not interested in that because either one of those conditions could exist. So I'm not looking at a volume idea, not that I would anyway because this is pound dollar forex, but if you looked at the British pound futures contract, and I didn't do this, so you might want to do this for yourself, look at the volume on bar chart and pull up the futures contract for British pound and look at the price action on the 9th on a 15-minute time frame and then apply volume to the chart and look at the relationship between this high and that high and see if the volume is higher or lower just for your own observation. But because this was an underlying bearish PD array, or premium array rather, this whole idea of looking at volume or that market's top because it runs out of buyers or there's an increase of sellers coming in is absolute nonsense. That's not what this is. And you're led to believe all these things. The problem with this is going just to volume. How do you reconcile that? When you have volume that could be interpreted as high volume here and lower volume, there was less trades up here, versus if the volume is high and then even higher here. How do you reconcile that? See what I mean? So it creates an opportunity for two camps to say, my method works, when neither method is even the basis of why the market's turning here. The bearish order block within the bearish market condition and environment's bearish, and we are inside of the peak or smart money reversal of a market maker sell model on that daily chart. So I'm demystifying, okay, everything that everyone on the outside says, oh, I'm overcomplicating, I'm renaming this. No, I'm stripping and peeling away the onion one layer at a time. And I'm going to take you down to the sweet center of the onion. Okay, not the dry, flaky stuff that you choke on if you were to eat it. I'm taking you to the heart of the matter. And when you get inside what these price action swings and moves are doing, it removes all the ambiguity. It removes the uncertainty of what it is you're looking for and why you're going to execute and engage. The video I posted on YouTube is just like I do all the time. I create examples and I show it publicly. You get the inside interpretation. They just get the flash. The, wow, that was really good. And everybody around the world that's not here will swear up and down that I'm just doing the best trades. Well, even if that was the case, okay? Even if that's the case, why is the logic always based on the things that you are learning here? Surely I'd be off on something, right? If it's just me trying to get right and I'm doing two screens, which is stupid because I can only show you one screen with my trading view account. I am ICT. That's my thing, okay? When you trade on that currency, whatever you're showing a position on, you can't create another trade in the opposite direction because it's going to show you the position that's open in that currency. You follow what I'm saying? So every excuse these people have that are not in this room, or not room, but in this community, they can't figure it out. When you guys know exactly what it is I'm doing, but you're seeing me do it live. You're seeing me do it as the market is living and breathing and it's doing what it normally does. And I'm reading it like I've seen it happen dozens of times and I know what's going to happen before it happens. Because of the things I'm teaching you here, you're learning how to do that. Do not feel slated like you can't get it right now, so therefore you're never going to get it. It took me a long time, folks, to get this. A long time. And even after 6 years when I figured out what it is I wanted to do, I got better as the years went by. So don't think that when I say 6 years I figured out what I was doing. It took me still time past that 6 years to get really refined and good. So all of you, I got charter members that rushed through in the 2021 group because I allowed accelerated payments. I tell them, you're welcome to do it, but you're never going to retain everything. And they're creating threads in the charter area. I feel lost because there's no way you're going to put down 1,100 videos and digest all that. You're not going to do it. Okay. No one has the mental capacity to watch what I've done in the mentorship, all the commentaries, all the supportive studies, backtest all of it, look for it in your charts. There's no way any of you can do that. And it's not a surprise to all of us and myself, and it shouldn't be a surprise to those of you that went through the accelerated payment program just to get the charter faster. To make a thread on the forum and say, I'm lost, I don't understand this, because you didn't listen. You're trying to expect full understanding just because you purchased the videos and watched them like Netflix. You can't binge watch this stuff. You have to watch it with note taking. Once you note take, go away from it for a little bit and then come back to it either the next day or later that same day. Like if you're going to watch it in the morning, any video. If you watch it in the morning and you have time to go back to it in the evening, that's good. But when you watch the first time, you watch it with taking notes. Then watch it a second time. I'm not making money off the views, folks. Okay, I'm not asking you to do this because I'm getting ad revenue. It's for you to learn. It's your edification. So by doing this, what happens is you've already taken down what initially drew your attention for the note taking. The second pass through the video, you're going to hear things that didn't really register the first time. And it may create a question or answer in a concern or a doubt that you may have about something. Okay? And that's where the real learning starts to happen, because you're not just watching, you're absorbing. Okay? And when I give you skill set ideas and drills and things to do, or things to look for as a signature in price, those things are what you're writing down in your notes, in the journal. By you writing them, your subconscious remembers it. And by repetition, you're going to hear me say certain things throughout this mentorship and in these commentaries. Because of the redundancy of it, it sounds boring because you're just watching it like Netflix. If you watch the same episode of a Netflix series, okay, if you watch it multiple times, you're not going to be engaged. You're going to be put to sleep. No matter how good looking the woman is, no matter how action figured the guy is, and how many times he shoots the gun, you know what the outcome's going to be. So you're not as entertained, you're not drawn in. So if you treat my videos here, even on YouTube, the same way, and you're not really trying to draw out the information because, oh, it's boring, well, that's not my problem. That's your perception and your laziness, okay? And that's why I like to say many times, I want to grab you by the lapels and just shake you and say, wake up and just listen. Listen, take notes the first time, and then go back into the video again. Because you're never going to learn this stuff going through the mentorship videos one time. It's not going to happen. None of you, not one person is going to be able to elevate themselves just by one pass through. It ain't going to happen. It's too dense. It's too much content. Do you need everything understood for you to find your own model? Absolutely not. But if you focus on the things I'm teaching and showing you in the commentaries of why I'm looking for certain things, and when I show you examples of me executing, proving the concept, proving visibility, I'm typing it in, okay? I'm typing it in through TradingView, what I see before it delivers, and it, boom, delivers like perfect artwork. That's not bragging. That is a testimony to understanding the very thing, the craft that I'm giving you, that I've spent my entire life working on. Once you understand these elements, it removes all that rush. I need to do it right now. Or I'm getting uncomfortable because I can't do it. I should have learned it by now because everybody over here on YouTube is talking about how it takes 2.5 years or 7 years or 10 years or whatever. These are people that complain because they never would have gotten it anyway. Period. That's why they dropped out. They are weak students. And it's not because they're just weak here. I guarantee you they're weak in every aspect of their life. And that's why I teach you holistically, across a whole broad range of things, how to treat yourself emotionally, psychologically, how to manage your fear and emotions, how to balance greed and fear of missing out. All those things are normal. They're normal things. But when you study the market maker models and the price action models 6 and 7 as a charter member, it gives you the very framework that I used in that cable trade. And it was perfectly delivered. It was like exactly what you expect to see in my hindsight charts, where I say, what do you see? But I see it before it delivers. That's what you're learning here. Do not make threads in the forum and say, I'm upset with myself because I'm failing and I should have done this because I've done 2 years and I should have gotten it by now. Who says that? Who says that? Who said that you should have gotten it by 2 years? When I've already told you as your mentor, it might take you longer, and it's normal. But if you constantly feed yourself negativity or listen to yahoos on the internet that say they have something sweeter and better, Go do whatever they're doing. If that helps you, then forget everything I taught you. But if you see me showing you what this stuff does and how it works, and I can do it because I have the experience. The only reason why you can't do it yet is because you don't have the experience, which is what mentorship is. I'm lending you my experience. I'm showing you what it looks like so that way you see it, you see that I can do it, and it's precise. It's precision. It's artwork. And it's fun. When you know it's likely to deliver. If it's not likely to deliver the second level of distribution, or in this case, redistribution, and you're looking for a sell-off, you're probably not going to get these nice, sweet drop-offs in price. You're probably going to get stagnant price action, maybe even be a losing trade. Now, do you see the distinction there between, all right, I think it's going to go down because it was at a bearish order block, or this is a price leg that's in the sell side of the curve. Once we broke this short-term low here, bearish breaker, in your mind, you're thinking every short-term rally is a selling opportunity if it's in a kill zone. Boom, there you go. That right there, folks, that right there fits on the back of a business card. That's your trading model. Done. Now, how are you going to get in? What's your favored entered trade concept? Like, what is the entry mechanism for you? Well, let's go through a few of them. The bearish breaker, okay. We have the optimal trade entry in here. The fair value gap being rebalanced to here. This area here, breakaway gap. In here, fair value gap trades up into that with another level of redistribution. There you go. There's another selling opportunity. Institutional order flow entry drill. There. Breaks down. Bearish order block. We open on this candle, trade deeper into the candle here. Sells off. Okay, fair value gap in here. Trades up into it on the discount low. There's an opportunity to enter there. And then another opportunity in here and sells off deeper into the retracement of the liquidity that rests below that old daily low, which is far over here to the left. If you train your eye to see a market that rallies up to a level you expect selling, then it starts to break down and you see this area right in here, that is displacement. The algorithm is flashing that. Okay? It's like a broad neon sign saying, interbank traders, get ready to sell short. When I reprice back up in that range, it's at a short-term premium. Sell short. And aim for the liquidity down here. That's what the algorithm does. That's what all of these electronic markets are doing now. It cannot be argued. It cannot be defeated with, I don't believe it because it wouldn't work that way and they can't control this. Who can't control what, man? Seriously, who can't control what? You have cable? You have satellite TV? Who controls the options of what you watch at what time? You don't. They do. Who's they? The owner of the company. They make that market. All of these markets have controlled mechanisms, and they are not going to leave these markets, especially a currency, to chance collapse. Think about it. If every single person in the world that gets in these markets and trades them had the ability to muscle them, like I can't think of the group on Reddit. I think Wall Street Bets or something. I may have that wrong because I think they're silly. But the group that thought they were going to muscle GameStop and BlackBerry and AMC, they're going to corner the market. Look what their stocks have done. I told you to stay away from them. And they have been just chopping people up. We, as the ants, cannot move these markets where we want them. We might create a little short-term blip in the futures market because of the volumes that are created there. But in a currency market like this, you are absolutely not controlling anything. Wherever you're entering, you're getting filled based on what the market price is being offered from the central bank, period. Separated by the spread of your broker, that dealer. He's not a market maker. The central bank is the market maker. So when you strip all this away and you throw all the facade of all this nonsense, this retail crap, these things that they want you to believe, oh, it's a net sum zero game. There's a winner and a loser, and it's always going to be based on buying and selling pressure. It's hogwash. That is the biggest load of malarkey there is. It's absolute nonsense. And as soon as you just place that stuff down and no longer hold on to it and accept the fact that these markets are absolutely manipulated and controlled because the currency is the commodity of the bank. Why would the banks give control or the opportunity to manipulate where these markets were going to go and take that control and power from them? You honestly believe that these folks that have placed these banks all around the world and created these currencies, which are nothing but an illusion, you think that they're going to let anyone take the control out of their hands? Come on. Like, that takes more faith to believe that than it does when you just strip it away and say, okay, here, I'm going to prove this to you for years. I ain't been doing this just for a couple weeks, folks. I've been doing this for years. It's documented in here. Everything that I'm teaching you repeats. But the problem is, most of you, and this is predominantly going towards the 2021 group, you are forgetting that this is not going to happen for you right away. Because the rushing aspect, the impatience aspect of your development is eating on most of you in that group. Like you feel this mad dash, and it may be because of the world's current environment, and maybe you're about to lose your job, or you fear losing your job, or any of those types of things, okay, and you feel like you have to learn how to do it right now. You need to relax. You just got to slow down and relax, because the markets are real quiet right now. They're not going to stay this way. And when it creates these wide gyrations, you're going to have a whole lot more market maker models. And that creates salad days, easy trading, real easy trading. But when the ranges are small and tight and it's just a real quiet marketplace, it forces you to scalp. And it's unfortunate because a lot of you aren't going to want to do that type of trading. So it feels like, oh, this is broke, or the concepts don't work, or this, or it's that. When you just aren't able to see because of the experience, which is the reason why I tell you have to go through a full calendar year to see what the seasonal impacts are. Then, while doing this and studying it for a full year, I'm teaching you components and conceptual ideas modularly that lead to a trading plan and price action model in Charter. And then, once all of you now, that are 21 group, once you become Charter members, then I will go back to doing the algorithmic theory for the remaining models. I've only done the first one. Okay, so once we're all Charter members here, I have the groups split down to smaller ones because you're all going to, well, not all of you, but some of you in here can't wait for me to do that because you want to share or you want to sell. There's a lot of people waiting for that. Okay, I'm going to get you, okay, because it's in groups of 10, and it will not take me long to figure out who you are. So there will be another wave of purging, and that wave will just miss out on the continued teachings in this community. But knowing that this is the heart of the mentorship, looking at when is it the highest probability, it's the second leg of distribution on market maker sell models. That's the easy setup. And if you find this fractal on any time frame, you're going to find that that's the best one. That's the holy grail setup. That's the one you're looking for. That's the one you're waiting for. Now, there's other opportunities, obviously, to trade outside of that pattern, but that's the one that I gravitate to because it's this easy for me to see. I don't have to do a lot of work, and I'm doing all these other things. So it just allows me to jump right to it. And I'm looking for that, and it's going to be the highest magnitude in price delivery. It's going to spread and run farther and faster because of its general nature of that pattern. The algorithm is rushing quickly to get down to that liquidity. They don't want traders to say, oh, this is probably going to be a short. They don't want to give it an opportunity for them to flash and say, oh, well, let me get short too. They don't want that. That's why they program the algorithm to move quickly. You're going to see it as everybody sees this. The algorithm's going to end up getting broken because we all learned smart money concepts from ICT. Wrong, 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 wrong. This stuff is not going to change, okay? If they move everything to one currency, it won't make a difference because there's going to be commodity markets. There's going to be index futures, okay? This stuff works everywhere, okay? There's certain nuances that are in Forex that are subtle and are very characteristic to that asset class. But what I'm teaching you from a price action standpoint and how the algorithms work, it's the same across all asset classes, except for crypto, okay? Which is, again, why I don't touch it. I do not trade it because it doesn't have these signatures repeating all the time. If it ever did, I would probably be the largest crypto trader on the planet because I would go all in because they move around a lot. But they're moving around in ways that doesn't make sense to me. So I can't trust it. I can't allocate funds to something like that because it feels like playing Keno, okay, or lottery. So when we're looking for opportunities in the marketplace like in Forex or futures, that second leg of redistribution when it's bearish, that is the sweetest candy to be taken with no opposition. And don't think because it's shown on the 15-minute chart here that you can't find it on 1 and 5 minute charts inside of a 60-minute candle that's bearish, because they're there all the time. That's why I said on my community tab, I don't need to wait a long time for a setup if I'm going in there to beat the brakes off of somebody. That's how I can run these accounts up real quick, because I'm looking for that phenomenon that repeats on all time frames when I have a clear draw on liquidity. Before I even sit down in the chart and consider entering anything, I want to know what's it reaching for. You know this, folks. But the question I want to ask you is, how often is that the first thing you're looking for? Many of you in the 21 group are rushing for the entry, and you want to see what happens once you get in. That's why you're failing. That's why you're floundering, because you think that's the mystery. That's the not the mystery, but that's the solution. When the mystery is that you need to know where it's drawing to. Where's it likely to go, and why should it go there? That builds bias. Once you have that, then you wait for market structure to get you in sync with that bias. You just don't say, okay, bias is bullish, market structure is bullish. Okay, what are you waiting for? You're waiting for that second level of redistribution if you're bearish, or second level of reaccumulation if you're bullish. That's the holy grail. That's the secret recipe. That's the silver bullet. That is the friggin' thing that you all need to know. Because if you know that, it doesn't matter what anything else I teach you. It will just amplify that setup. That's the thing. When I run these accounts up all the time, when you saw it on MT4, it was not a rented MT4 server. Okay, that was garbage lies. Okay, there is no evidence whatsoever that I ever did that. I didn't need to do it. And why am I able to do it on TradingView? Did I have TradingView rented servers? No. Come on. What am I doing? I'm doing that. That pattern on all time frames. 1 minute charts, 5 minute charts, 15 minute charts, 30 minute charts, hourly charts, 4 hour charts. That is not hard. What's hard is for you to grasp the fact that that's what I'm doing. And that's all I'm doing. I'm looking for that unicorn pattern that evades everybody else's perception and price. but it's there if you know what you're looking for. Everybody out there talks about market maker sell models, and they look at this and look at that, and they want that smart money reversal because, well, smart money, that sounds like they're the upper echelon. I don't need to enter there. I can, but I don't need to enter there. You don't need to enter there, but you need to understand that that is what it is. And once the market proves to you there, that's your real break in market structure. How do you know when the market structure is really broken, Michael, and not just a retracement for stops? What I'm teaching you here. Folks, listen. I'm literally compressing. For some of you that are in 2021 group, it's going right over your head, okay? I know that some of you might be thinking, wow, this does make sense, and you still really don't got it. But the folks that have been in 2016, lessons like this really gets their juices going. Okay, 2018 group, 2019 group, they're like, hell yeah, this is it. Because what I'm doing is I'm compressing. Okay, I'm compressing the logic of what this mentorship is. I could teach you how to trade just like I do in about 3 to 4 days, with the assumption that you understood all of the components individually beforehand. Then when I talk like this, that's why the folks that are from 2016, 2017, 2018, 2019, maybe not so much 2020. I don't have that confidence in that, but the 19 to 2016 group, when I teach like this, it should really resonate with them because what I'm doing is I'm compressing all of everything they've been introduced into a conversation that literally can be written on the back of a business card. And it will be meaningful to them. Whereas if I took this and wrote this out, you're not going to understand it as a new trader or a new student. I could literally do this, and I'm feeling actually very tempted to do it just to put it on my YouTube channel this coming Saturday. To say, here's my Model 6 and 7 trading plan. Here's my business card. There you go. And it will be looked at as, this is cryptic. He never really teaches anything, which is nonsense. Because you will, if you understand everything that's been taught here in mentorship, it will be like an inside joke. But you'll get it. 21 group, probably not. But you're learning all those things through the core content. When you become charter member, you'll see those price action models and trading plans, algorithmic theory, and it'll compress and bring everything together for you. But I can't talk to you if you are a baby in your understanding. And I don't mean that to be derogatory. I'm not trying to say you're a child. Okay, but let's be honest, folks. If you don't know what these things are that I'm teaching you and you're in the mentorship 21 group and your first time being introduced to this stuff, it can be a little intimidating or very easily lost in the conversation because it sounds like I'm just talking to fill up the time when I'm not wasting any time and I'm not wasting or mincing my words. I'm going right to the heart of what it is that you should be learning here. But because you don't have supportive studies, experience, and lessons behind you, properly studied, not just let me go through this month's content like it's a new Netflix series. You're not drawing like your body draws nutrients out of the food you eat, okay? If you're just woofing the food down, you don't chew it up real good and allow your body to digest it well, you're not going to get the nutrients out of it. Same way, okay? You have to chew on this content and really draw out the nutrients that are there. I'm obviously giving all kinds of analogies, but it's just like that. And once you strip down the whole entire thing, the whole thing as a complete collective thought and mindset, then it's easy to go in and see what I'm showing you here. It's not just simply, oh, it's a overbought situation in a bearish market. No, it's not. Because you can go back and look at situations like this, and it may not be in a market maker sell model. It might be in something entirely different. And that might not be a trade idea that you would gravitate to. In that instance, it's a trade that you would just simply let go, and you're not going to be upset about because it doesn't fit the criterion that is placed in your hands in this mentorship. So when I teach like this, all it's going to do is get your gears turning about how you want to be a Model 6 and Model 7 trader. And that's fine. I just don't want to twist your arm and make you think that that's the only thing, and if it doesn't work for you, that you feel deflated and lost because it didn't work for you. This is the reason why I tell you, try all of the price action models. You get 12 of them, okay? The first one is easy money. It's like easy, like really easy. Like you literally can quit your job if you've gone through mentorship, really digested everything, and you have a complete understanding of everything I've taught, and you submit yourself to that. In 6 months, you could be consistently profitable, apply sound money management, give yourself some time to grow it, or I guess get a funded account to support yourself. You don't need a job. And I mean that wholeheartedly. That's not a selling thing because you already paid me, okay? I'm not trying to sell you. I don't need to sell you, okay? You see I can do this. And there's students in this groups that can do it too. They're getting funded. They're doing it with their own funds. It's something you can do. But the problem for most of you is you're putting these barriers that are really not barriers. They're just things that you're hung up on. And you're placing them right in front of you and saying, I need to learn this or I'm never going to go forward. I need to have this. No, you don't. You don't. Those mountains you're forming yourself. If you feel stuck, that's what your journal's for. I have a concern about this being an impediment on my learning. I don't need to have the answer right now, but this is what I feel like I need to have answered over the course of my development. You hear what I just said there? You acknowledge that you have something that is feeling like a barrier right now, but you're giving yourself permission to not require the solution to that at this very moment. So you divert your attention from that and you go on to the next lesson. And you're going to find by doing it like that properly, with real good note taking, and then watching it again to draw out the things you may have missed the first time. By doing that, you're going to find that those questions you write down, which is what I tell you before you even join the mentorship, you're going to have to use a trade journal. If you don't use a trade journal, you're not going to develop. You're not. And everybody that has said, I'm not going to do a trade journal, I say it's stupid. Or I don't know how to really do one because I don't have one like ICTs. It feels like it's waste. I don't have time to do this. Well, your results are going to speak for itself. Because every single person that's done very, very well here are one that submit to journaling. Because you're not going to disarm yourself emotionally, psychologically without doing that. And what do I mean by that? You're going to remove this plague of problems that you're creating for yourself by placing them in your journal. You're acknowledging that these are real concerns for you, but you're also giving yourself permission to not need to have that answer right now. And you're writing that out. And what that does, it places that forgiveness in your subconscious. And it allows you to let go of that problem. That it's like, well, it was exactly like it was before I had this surgery. I was nervous about being put under. I didn't want to go under. And never having been put under anesthesia, I was worrying, and I couldn't do anything the night before. I was going to do a video. I couldn't do it. I could not do anything. My wife wanted to have a conversation with me. My kids wanted to talk to me. I wanted to do something with you guys. I couldn't do it. I'm completely just consumed by it. That's what you're doing with things as you're learning here. Okay, I need to learn how to get the right order block. No, you don't. You don't need to know that right now because that'll come over time. But you're obsessively worrying about something that, well, I had to have the surgery. Okay, that had to happen. I had to be put to sleep to go through it. You don't have to worry about that thing that you are increasing so high that it's obsessively worrying you. You don't need that in here. The way you disarm yourself from that is you put it in your journal, you acknowledge it, and you go on to the new next topic. And then as you go through supportive studies, because they all interlock, you don't appreciate that yet because you haven't been to charter level. You haven't gone through all the lessons, and you haven't seen enough commentaries, and you haven't listened to how all these things are drawn together for you to, well, appreciate that perception and perspective that will be given to you because of the time element. Not, oh, I need you to make all your payments to me. I need your money. Okay. No, you have to go through this. This is the way it is. You're not going to get this real quick. So the whole entire process is designed for you to have every advantage. And I teach you how to navigate all of these psychological barriers that you create for yourself. But if you choose not to do them, don't blame me and don't blame the concepts if you don't have the results you're looking for. You aren't doing what it is you're supposed to be doing. And I have had so many students come in here, swear up and down, oh, well, I'm really trying. You might be trying to watch videos, but are you doing everything every single day that you're supposed to be doing? Are you back testing? Are you studying? Are you looking at how much it moved, where it moved? When did it begin to move? What did it reach for? What was the draw on liquidity? What was the higher time frame buy? There's so many things that you have to do repetitively that feels redundant in the beginning because you don't know the benefits of doing it. It just feels like I'm giving you time-wasting drills and just walking you down the primrose lane as long as you keep making payments. That's what some of you think. When all I'm trying to do is push you through 12 months of basic training. And if you don't have the discipline to do the things I'm telling you to do, I can't go to your house and make you do them. I can't make you go into your journal and journal all these things. Okay? I can't make you do those things. You have to have the discipline to do that personally. If you don't blame me. Don't blame these concepts. Don't blame the logic for your failure because you are the person that's the reason why it's not happening. You are the reason why it's taking as long as it's taking because you're wrestling internally with these things that you're worrying about the wrong things and not concerning yourself with the right things. And the perfect example is everyone that rushed through 2021 with accelerated payments. I know some of you want to say, oh, but you gave us the opportunity, so it's your fault. And some of you are literally thinking that right now. And you're smiling right now because you're thinking, oh, I was. But that's not true. I gave you the option to do it because if you want to do it, and I know some of you do, but just understand that you should not rush through it. If you want to get through all the administrative side of it and just have access to the content, great. It helps us with bottlenecking, and it has done a great deal of reducing all of that from the administrative side. But I think I got 4 or 5 people from the 21 group, as I mentioned earlier, that are mentioning in their own little thread they're creating on the forum, which to me is just unfortunate because I said this is what's going to happen if you rush through. You're going to get to the end of all the core content, and now you're a charter member, and it's going to feel like, I don't know what I thought I was going to know. Whose fault is that? It's not mine. It's not for a lack of trying and teaching because I gave you tons of content and drills and things to do and what to look for. And then the weekly commentaries, I'm telling you what I think is going to happen, where it's going to draw to. So you have every advantage except for me telling you to get in and get out and telling you what to buy and what to sell, how much, what's the leverage, and where's your stop. That's the part everybody wants. I'm never going to do that. You knew that before you got in here. But you have every advantage in learning how to do this properly if you submit to it. But all of you that come in here all think you're going to be that crackerjack that says, well, I'm just going to do it my way and then I'm going to surprise and I can figure it out easier because I'm smart. I don't need to have to watch these long videos. Just give me the short Cliff Notes version. Man, it doesn't work like that. It doesn't work like that. I've never had a student, not one time, not in YouTube or in this mentorship, say I'm consistently profitable because I took shortcuts. Never, ever, ever happens. It's never happened. Okay? The folks that have got to that point of consistency and they don't feel that rush that I gotta know what I'm looking for every 5 minutes, those individuals have submitted to everything I said. They took it to heart. They trusted my guidance. They trusted my mentorship and my experience, and they put it to task. They are the ones that are doing well. That's just it. And it's not surprising because that's exactly what I told those individuals was going to happen if they did it. Now, have some done very good work and have study ethic that is equal to those individuals that are successful now? Have they done that type of thing and have not yet found consistency or their unique model? Absolutely. Some of them are in the 2016 group. But again, the question is, how is it that 2016 members are either funded or trading their own money and are consistent in that same group? How is it that those individuals can do it? And there are some that just simply can't trade themselves out of a wet paper bag. And I don't mean that to be derogatory. I'm not making light of it or making fun of you. But my question is, what separates you? What separates you two groups? The profitable from 2016 and the unprofitable that feel lost. I can't answer that. I don't know what you're wrestling with. I don't know if you really did. You might think you did all those things. You might say, well, I did it. And you may not have really done it. That's a possibility. But until you submit entirely to this whole process, your results are going to vary regardless. But you should not be surprised if you've taken shortcuts along the way, and if you don't feel absolutely confident about what it is you're looking for, how you're going to engage, what you're looking for in the marketplace to see setups form and why they should be forming and where it should draw to. You got to question, is what you've done thus far been wasted effort on your part, not mine? It's something that other people in here, and it's not a little bit of people. I have successful people here. But I do acknowledge, and I've said this repeatedly publicly and in here, I have some students in 2016 that literally cannot trade. Period. They can't do it. And for some of them, it may be they never will. And that's a reality. And that might require someone like them going outside of mentorship and saying, okay, let me try something else. And maybe they require something that's automated, something that is, mechanical, where it doesn't require their personal interpretation. They just, okay, this says I got to do this. This says I got to do that. Maybe you are predisposed to work with something like that. And if you use sound money management, then whatever, that's great. Or you may try that and say, man, I ain't never going to deal with this. And then you come back to this and you go through the whole process again. I don't want to go through that. No, by the way, I'm not going to do that. Well, what are you going to do then? You made the investment. It's not that this stuff doesn't work because people here use it. I use it. You see it. So I know this is probably uncomfortable, especially if you're in this group. And maybe you're in 2019 and you fit this description. You just can't find your footing and you don't know what it is you're trying to do. I can imagine how frustrating that is, but I've been there. It was 6 years, folks. 6 years of nobody telling me to continue. So once I stripped it down and I started seeing this pattern, that was my go-to. That was my bread and butter. That was the thing that I worked with the majority of the time. And then when these don't form, I'm using the other things that I teach you. Simple order blocks, optimal trade entries, short-term little moves. And then I load up. And here's for the notes, okay? I load up on these redistribution and sell models and reaccumulations on the buy models. That's where I load the boat. That's where I push maximum leverage. Maximum. Because I know I have a lead pipe cinch trade. Am I likely to fail? Probably not. I trust everything that's going on in the marketplace and I'm going in full bore. Do I lose sometimes like that? Absolutely. I've lost trades doing that. But I'm not demoralized if I do, because I know this pattern repeats. And if I see it again, I'll trust it and I'll still do max leverage. This is not to say when you think you see it to use max leverage or 4.5% risk on your trade. Don't do that. Okay, I'm not saying that. I'm teaching you how I interpret it and why you see me doing 4.5%. 4.5%, not 5. 4.5% is my maximum leverage. But when you see me forcing, the highest leverage on a trade, it's on this framework. And this framework could be inside of a 1-minute chart, inside of the range of a 1 hour chart, or candlestick rather. Think about that. In 1 hour candle, if the range allows for that type of market maker structure, and the bias I'm looking for is likely to occur, I can trade in that 60-minute candle with a 1-minute chart, trading with that second level of redistribution if I'm bearish. And churn it. It's a beautiful thing, folks, once you understand it. But you have to know everything and be familiar with everything I teach you here. And what about seasonal tendencies? How's this fit in there? Well, if you know that the seasonal tendency is likely to create the bearish environment, then you wait for the structure to get in sync. Then wait for the market maker model to be in sync with that seasonal tendency and market structure. Then wait for the second level of redistribution if you're bearish, or second level of reaccumulation if you're bullish. That's your unicorn. That's your thing that ICT constantly looks for. That is not Enigma. Okay? This is just my bread and butter pattern. Enigma is something entirely different. It's not even a chart. But for charting patterns' sake, this is that thing. This is the thing that I teach you that you can see, that my children hopefully will grow into understanding how to see. And if they do, then they don't need to work the rest of their life. I make my children work jobs because they didn't want to learn this. And if you think that makes me a terrible father, whatever, you're entitled to your own opinion. But I will not lay money in their hands if they don't put effort into this. I don't care if they just make $30,000, $40,000 a year. That's fine. I'm not asking them to get rich. I'm not expecting them to get rich. But I'm expecting them to learn this because that's what this mentorship is for. It's not for you. It's for them. You're just paying for a seat in the house and the right to observe. I'm speaking to them. That's who I'm talking to. And the reason why it feels like I'm talking directly to you is because I'm being sincere with the image of my children in my mind. And it's easy for you to receive that like I'm speaking directly to you. Because I want them to feel I'm talking to them, because I am. And that's the benefit of being here. I'm teaching through love. I'm not teaching through pride and arrogance. That's the difference between ICT here and ICT on YouTube. So, anyway, I covered a lot of stuff here. And I, in my opinion, condensed the entire mentorship in a conversation that is only meaningful to someone that has been here for a couple years. And if you don't feel that, it's because you're Group 21. You don't have everything in your hands yet. You haven't done enough of the work that I teach you to do. And you just don't have the experience yet. But I promise you, okay, in your notes, write this date and this recording down, okay? Because this is one that you should listen to twice a year. And you can pick when you want to watch it, but at least 2 times a year. Once in the spring, once in the fall. Okay, there it is. Cycle through this one each year. And you're going to find that what I'm saying in this video is going to be much more meaningful. And you'll understand really what I'm saying as more time goes by being with me. It's going to seem like I made a different video. So when you download this, as you should be, you're going to swear that I got into your computer and I added something extra when I didn't. You just are worrying about everything else. I'll say this before I continue. I did a magic trick in the Illusion of Choice SoundCloud, and I put that same video or audio on a video on my YouTube channel. And it's an exercise in priming. The listener feels like they have a complete and wide choice of things when it's a predetermined outcome. I have 2 outcomes that I'm delivering. You don't feel it happening, but I'm manipulating your perception, just like a market maker does in these charts. That illusion of choice and the things that your attention is being held on prevents you from seeing the forced outcome. That same phenomenon is what you in here are doing to yourself if you're struggling still and you've been here for years. You're putting the concern at an elevated level on things that have been proven to be barriers for you because you make them barriers. You need to lay it down, go back through the content, not thinking about you needing to figure that part out. Because you're obsessively thinking about that thing and it's holding your attention. So why is it a surprise that anything I teach you beyond what you've learned up to that point that's a sticking point for you, why are you surprised that you can't learn past that? Because I'm not holding you back. I'm not withholding any new content or teaching. Obviously, this lesson here is gold. But it's not going to be gold to a new student. It's not going to... If I put this on YouTube, I could literally take this video and load it to YouTube tonight. And they'd be saying this is a long, boring video. But for folks that have been here for a while, and they're familiar with the market maker sell model and buy model, and they're familiar with market structure, they're familiar with the draw and liquidity, they are familiar with the weekly range phenomenon. Out of another 21 group member, let me hold that thought for a second. If I'm not mistaken, I think it was a 21, but I think now thinking about it, it's a 20 member. Don't quote me on that, but I did mention, I talked to them on their thread today, and they were making a point about why was I concerned about mentioning it's Tuesday in a particular trade idea. That was flabbergasting to me. And don't be offended if you're the person, okay? I'm just stating that everybody knows that on bearish and bullish weekly profiles, Tuesday is 70% likely to create the high of the week when it's bearish or the low of the week when it's bullish. So Tuesday is very significant. So why anybody would ask why Tuesday is even mentioned in my observations and in my annotations and commentaries, to me is astonishing. Like, that's something that I teach on my YouTube channel. So to me, again, these are those types of things that are glaring, obvious, bulletin points, okay, that scream that this is somebody that didn't really go through the content well, didn't take proper notes, and was worried about other things instead of the lessons individually, and drawing out the insight from each individual lesson, which will build on your complete understanding over the time of the mentorship's 12 months core content, and then what you get in charter. So it's frustrating for me as a mentor, because if I tell you before you even begin how to go through this mentorship, and then as you come in the first month, I give you a lesson on how to do journaling. And then I talk about in the commentaries, this is what you should be writing down right now. I draw special attention to things that you should be taking down as a note. And things repeat over and over again, which is very boring. And it makes the videos boring because you've heard me say certain things over and over and over again. You got it. I heard it, Michael. Come on. You want to be buying below the opening price on it's bullish. It's power 3. Blah, 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 blah. We heard it. We heard it. But what are you doing with it? Are you applying it? How many times have you applied it in the past 4 weeks? How often are you applying it in the last 3 months of a quarter? There's trades forming all the time with it. How many have you taken? How many have you engaged with? You might understand something. Like if I teach you a magic trick with cards, I show you a trick. Oh, that's really neat. Can you show me how that works? Yeah, sure. I'll show you. Here it is. Then you walk away thinking, well, it's not so magical. Now I know how the trick works. But you can't perform the trick. So it gives you a false sense of, well, I know how it works. So I'm not impressed. Then you have the other folks that want to learn how the trick is done. And they think they know how to do it. And they go out there and try to perform the trick. And they just completely botch it all up. And then because they can't do it, they'll say, well, it's a stupid trick anyway. And that guy that showed me that trick over there, ICT, he's just a scammer. So it's not hard to understand how the mental, wrestling match, pans out. It's all in the personality of the person and how they conduct themselves as a student. The responsibility is on you. It's not on me. I'm literally laying this stuff in your lap. Every single time I talk to you, I'm laying it in your lap with the understanding that you knew before you came here that this is going to take a lot of work. And some of you were surprised. Some of them were so surprised they quit. They're gone. So I get it. But understanding that market maker model and what the importance is, like I don't teach that aspect of the market maker models on YouTube, but the overall structure is there for people to study and discover on their own. Now, that's not to diminish the importance of all the other factors of that fractal, because each one of them are useful. I prefer that second leg of redistribution when it's bearish, or second leg of reaccumulation when it's bullish. That's the pattern I'm looking for. Like I could be doing 1,000 different things. If I know my bias is bullish for a particular market, I'm going to go in London or I'm going to go in New York and see if it offers me that pattern. If it's not there, I'm not probably going to do anything. Unless I'm really trying to show off and do something else. But I know I can find this pattern several times a week on a lower time frame, 1 minute, 5 minute chart. They're there all the time. They're there all the time. And that's a challenge for you. Go in and look for them. Look at how many times they form. Now, they're not all going to offer 50 pips. They're not all going to offer 30 pips. But if your minimum is getting 10 pips per trade, doing 1 for 1, because these people will go out here and say, you're going to have 5 to 1, 3 to 1, or you have a negative expectancy and your system's going to fall apart. Man, that's assuming you suck. That's what that's assuming. We don't suck here. Our logic is not flawed. It's precision oriented, and we know what we're looking for. So if that's the case, and we know what the market's likely to draw to, that's 80% of the battle right there. If you know what it's reaching for, entry patterns are easy. You get multiple ones. You get multiple entry patterns. I've taught you that. You don't need to have the perfect entry. You need to have the perfect understanding of where the draw on liquidity is going to be. Where's the market going? Why should it get there? What time should it get there? Those are the questions you should be asking yourself. That's it. That's the mystery that you need to solve for yourself. Because I promise you, if you get that under your belt, everything else becomes easier. But for whatever reason, your human mind, just like it was for me too, I wrestled with all these insignificant factors, these things that I felt were paramount for me to understand, or I can't succeed. I wasted years, folks. I wasted years, so many years, trying to worry about figuring out something that had absolutely no bearing on my success. The things I worried about early on, I don't even use that stuff anymore. Perfect example, Traders Trinity. You got people here in the 2021 group making threads. Hey, could someone show me how to use the Traders Trinity? Did you learn anything about the Traders Trinity in this mentorship? If you're a chart member? Hell no, you didn't learn anything about that. It was just me introducing how I started breaking down the market from price swings to equilibrium, and every range could be divided in half, and then it was premium to discount. That's all the benefit of Traders Trinity was for me. That's it. That's where it clicked for me, okay? So if you're worrying about or trying to apply Traders Trinity, it's not useful beyond what I've taught you on a YouTube video. Remember, when I did YouTube, that was a social experiment for me. When I went on Baby Pips, that was a social experiment to see if I could produce another ICT the same way I came up. Nobody could do it. Now, I'm not saying I'm superhuman. It was just I wanted to see if I could create that. And it didn't happen. Nobody was able to figure out any model from the things I laid out there. So take that for whatever it's worth. It may not be worth anything to any of you, but it was just my curiosity to see if I could create a monster, Frankenstein monster, taking strangers with just the information I had in the order I received it. Would it create the same outcome I have with myself? And it never happened. And here we are, we're 11 years later. So if it was going to happen, it would have happened. But anyway, I could keep going on and on and on. Probably some of you are thinking, man, I wish you weren't so talkative now. It was better when you were doing those short videos, ICT. But just know that the benefit of releasing personal struggles that you're creating for yourself here, the ability to do that is a skill set that won't be fully appreciated until you get used to doing it. And what do I mean by that? Give yourself permission to not need to know right now. You're not going to know everything as fast as you want to know it. And warm up to that idea. And I promise, I swear to you, in every fiber of my being, I promise you, years from now, you're going to look back at the things that you were so obsessively worrying about that's held you back. You're holding it in your hands. I need to figure this out, and I'm going to crack this. And the whole time, you're wasting valuable development time that will probably answer that very thing you're worrying about right now by default. Because you're not obsessively worrying about it, you're allowing your brain to relax about that thing like like a stone in your shoe. No matter what's going on, you could be dancing with your spouse. If there's a rock in your shoe, you can't enjoy that dance. You're not going to be thinking about the song and trying to remember that memory of this whole event. You're like, man, this damn thing's hurting my foot. I got to get it out of here. I got to stop dancing. So it's like that. And you really think about it, you're probably nodding your head thinking, yeah, it is. It's disabling. It's like mental paralysis. And it makes you feel toxic towards me, towards the content, towards the concepts, because you feel like it's broken when you are placing the wall or barrier right in front of yourself. All you have to do is walk around it. It's like a prison cell. The door is closed, but it's not locked. You keep telling yourself it's locked. Just open it up and walk out. Go do something else in the mentorship. That thing that you're worried about probably is just stealing your development. And you're doing it to yourself. Everybody does it. Everybody does it. And it's just a matter of how long do you stay like that before you make a change and resume learning. That's the only thing I can do for you. I can't fix it for you. I'm just telling you what it took for me to change and what it's done for other people. And apply it to everything else in your life, not just here. If you're constantly worrying about something, the only thing that got me through the night before my surgery was reading. If I had placed my mind on something else, I couldn't be worrying about the fear of getting put under anesthesia. I wasn't worried about the pain. I wasn't worried about the swelling, which I knew was coming. Not as much as it did, but the only thing I could do is distract myself. And to the point where I couldn't hold my eyes open. And I got about 45 minutes of sleep the night before. If I wouldn't have read, I probably would have been a wreck. I can't tell you much about what I read. But at least I was distracting myself, for the time until my eyes got heavy enough for me at least to get 45 minutes of sleep. Our brains are very powerful, folks. And that powerful brain can be an effective deterrent to you succeeding, or it could be used as a powerful engine to grasp on success and do it with an enjoyment, with a sense of accomplishment, and just appreciation if you do it right. And when I talk to you and I give you drills and exercises and things or approaches to doing this, I'm not trying to just fill up video time. I'm giving you things that I had personal experience with that were effective for me, that other students have used and it was effective for them. And it's worth trying them. Just like when I teach how to manage coping skills when you're having anxiety attacks. When you're in these trades and you eventually put live funds in, when you make that decision, you're gonna have an anxiety attack. Okay, it's gonna happen. You're gonna have a panic attack, and it's gonna feel like you're having a heart attack. It's gonna feel like you're having a stroke. It's gonna feel like you're gonna pass out, throw up, shit your pants. It's gonna feel like all that stuff. It's gonna feel like the world's closing in on you, and it's probably a $10 per pip trade that means absolutely nothing in terms of your whole entire career, but the outcome you've elevated it to, it's life or death. And you're gonna feel so silly 10 minutes after the panic attack passes. And you'll be questioning yourself, what the hell just happened to me? And some of you will question whether or not you're losing your mind. And here's where the kicker is. Some of you will look at that panic attack and it will paralyze you and you won't want to take another trade, even if the trade was profitable. I know that feeling intimately. So you don't know what you're going to deal with, and you have to take it as it comes. But knowing what you're looking for, this is what I look for. These are one of the patterns and why I like teaching Model 6 and Model 7 in this particular pattern. That stage of the market structure, that's the thing I'm trying to convey to you as a mentorship student. That's the thing that repeats all the time. It's always there. What do you think I'm talking about when I say every week, every day, and it won't stop? It's this. It's not order block. It's not breaker. It's not optimal trade entry. It's that right there. That's the thing. That's the thing that repeats every week, every day, and it will not stop. My challenge to you is start digging for it, looking at it. And then when you see it in hindsight, frame out why it took place on a higher time frame above the one you see it forming on. And then what does it look like in a higher time frame above that one? And you'll start to see this stuff and it'll start making sense to you because you're going in with an idea of studying for a particular pattern with a purpose. Why does this keep forming? What time is it forming? How much is the range it's reaching for? Well, if it's your entry here or here on redistribution, it's trading down here. Isn't that a respectable amount of range? That's 10, 20, 30, 40, 50, 60 pips from here. 70, 80, 90, 100 pips from up here. Like that's way beyond 50 to 75 weekly objective. So how do you look for these one shot, one kill, Michael, that offer that 50 to 75 pips? It's got to offer a draw on liquidity from where I think it's going to enter for a redistribution or distribution on the market maker sell model. If it offers that range of 50 to 75 pips, that's my one shot, one kill. Ooh, light bulbs. Oh, it's starting to fire now, ain't it? You don't need 50 to 75 pips. You might look at, say, a 5-minute chart, and it might be 2 or 3 25 pip setups where the draw on liquidity offers 25 to 35 pips. And because of spread, you get 20 to 25 pips. But if you find them a couple times a week, you can get your 50 to 75 pips that way. And I'm not trying to force you to just look for 50 to 75 pips. You can scale this to whatever you want it to be. You can use 4-hour charts and do swing trades, okay? And swing trades will give you a setup that allows for more than 75 pips. But it's still the same logic. It's still the same pattern. It's still the same part of that fractal, that element of a trade setup that repeats all the time. Every asset class, except for crypto. Okay? Anyway, it's a lot of boring talk. Let's get to the next business here. So on a 5-minute chart, I told you I'd give you some more detail about that market maker model. What makes this a level of redistribution? Because we took out this low, and then we retrace back up in. institutional order flow here, bearish order block. Why, again, was this institutional order flow entry drill, and how was I able to know it beforehand and annotate it before it dropped off from there? Buy side imbalance, sell side inefficiency, sell side imbalance, buy side inefficiency. So balanced price range, expect it as institutional order flow entry drill. Breaks down, bearish order block. I note that as it's happening, hits it, beautiful delivery. It's all hindsight, of course, that's what they'll say. And trades down to what? External range liquidity here. Then it digs in for internal range liquidity, high to low to high, optimal trade entry. This is a level of redistribution because it's part of a leg that's selling off to reach down to this liquidity down here. So if we dip down below this low here, why this low? Because that's the only low prior to this run up. This is market structure 101. This important low, high, lower low, retracement, this is going to be another level of redistribution. From this area in here, you can expect a sell-off to break below here and accelerate once it takes out this low to get down to liquidity on that daily chart or the original consolidate where sell-side liquidity resides. And look what happens. We go below it, we accelerate. Was there any retracements? None. Comes back up. Did it retrace all the way back to this old low like support resistance would be? Support broken turns resistance? No. We have a fair value gap, trades back to the discount low, and then bang. Heavy, heavy, heavy selling. Not selling pressure, but selling by the algorithm. Selling off. It's offering the price rapidly at a real accelerated pace, keeps repricing aggressively lower. Not because there's an increased amount of sellers. The increased amount of sellers ain't going to change any of that. The sellers came in here, and they came in here, and they were back here at the smart money reversal. This is just the algorithm giving the cookie to the interbank traders that were on the right side of the marketplace. Digs into it shallow, retraces back up in, consequent encroachment, sell side imbalance, buy side inefficiency, then does what? A deeper run below here. So this would be running down equity. Every time it creates in low and runs below it, partials, partials, partials. Okay? All this stuff fits together. It all comes together if you have the complete material understood. Then it makes sense. Otherwise, if you don't have it, you have your favorite little thing, the breaker, or the order block, or the optimal trade entry, or now the buy side imbalance, sell side inefficiency, or the institutional order flow entry drill, the fair value gap. Whatever one that you gravitate to, that's going to be your entry pattern. But that's not the logic. That's just the thing, the mechanism that gets you in a trade. But you have to have all the narrative around that, or it's not going to work for you. Every little separation between two candles isn't necessarily a fair value gap. Okay, just like every up candle is not a bearish order block to sell short from. You have to have context. You have to have a narrative around what it is you're expecting, and that only comes from having a comprehensive understanding of everything I teach you over an entire calendar year. And I'll walk you through, and I'll tell you what to expect, what to avoid. It's probably going to be high risk right now. You don't like to hear that because that means we're doing nothing. But doing nothing is something profitable, always. You're not gambling. You need to know that without going through a full calendar year, you cannot see those things. You can't appreciate it, you can't learn from it, and you can't build experience around it so that way you can navigate on your own without me. That's why I teach this way. I don't teach you dependence on me. Okay, if I wanted dependence, I would give you trades and offer monthly payments in perpetuity. And who knows how much money I'd earn from that. I don't want that because it creates codependency. And I had a student that just emailed me, and I believe, if I'm not mistaken, it's a 2021 group member. He stated that the time away because of my surgery and not being able to talk and pain and all that crap, he was surprised to feel what it felt like not having me talk and encourage and place the right perception on the current market environment. He felt disjointed, and how unnerving it was to feel that. And that's why I teach the way I do, because I give you just enough to go in with a hint of what it's likely to do, and you go in and you work out your own framework between where it is when we do the commentary and where the market is reaching for. So that allows each of you to go in with your preferred entry, your own trade management, and develop your own model as a result. Because I can't force you all in to one mold, and that won't happen. If it was possible, every one of you would have the same results, and you don't. And you would never get the same results. No one ever. No matter what they sell, whatever they teach, whatever they promote, nobody's going to create students that have identical results. They're going to be different in their entry. They're going to be different in their partial, if they take partials at all. They're going to be entering and exiting at the different price, and it's never going to line up. So you have to welcome that and embrace the fact that you're going to be individually unique, and that's a wonderful thing. But you have to do that work to figure out what it is that you're comfortable with, because the variables are so infinite. I cannot sit down with a community this large and help you individually do this discovery, okay? I give you skills, drills, and exercises and lessons that help you determine what that is for yourself. If you apply yourself diligently, if you don't do that, you're not going to get it, okay? And it's not because of a lack of trying. It's not a lack of me not giving you what you require, because you've already got way more. Month 1 is enough. YouTube was enough. But I keep pouring on more details for precision, and you're struggling on things that probably are not as paramount to you as you've made them out to be. And that, again, just take your shoe off, remove that rock, so you can keep walking forward into the next content. All right, finally, good grief, we got off that British pound chart. NASDAQ 100. All right, so we came down and closed in all of the buy side and balance, sell side and efficiency. Went a little bit deeper in here, down to this indecisive candle here. And we came up, filled in this small little gap. And I personally think that the likelihood is we could potentially trade higher. I'm not trying to pick a top, as I mentioned when we were doing this idea, going short last week. That trying to pick a top is stupid. We've never been here before. This doesn't necessarily mean that we've topped. And I think this imbalance, which we'll see on the hourly chart here, that's this imbalance here. I did not extend it out in time, but you should have it on your chart here. If we trade up to it here and sell off, as long as we're below this, we have a potential to go lower. I don't favor that. I'm favoring the higher time frame bullishness. I personally believe that if we get above it, which I'm expecting this week, if we get above it and come back down into this range, act as support, then we could see a run into that 16,500 level and maybe even higher than that. In other words, running above this low resistance liquidity run signature here with the lower high here to that. A lot of folks are looking at this as the top of the marketplace. There's a lot of channels I like listening to that are not technical channels. They're just like the average mom and pop type channels, real small type things that are really of no importance. Just personal haunts that I've gone to and I've looked at over the years. And these aren't traders. These are people that say, oh yeah, the stock market's getting ready to crash. They've been saying it's going to crash since September. Okay. So I'm laughing because you all know that that's when we're looking for the seasonal low to form between September and November. Oh, it's last week of August to the first week of November or thereabouts. So somewhere inside that area of time, we look for a seasonal low. Yes, there's a technical likelihood of a sell-off when it's bearish, we're not in a bearish market. They keep sending these stocks higher into levels that are unrealistic and they're unwarranted. But as long as the trend is what it is, you got to keep taking the buy signals and trusting it. And that's the hard thing to do, especially when you're in levels like this, where I get so many people that are outside the mentorship and inside the mentorship asking, where do I think these indices are going to go? I don't know. Who the hell would know that? Nobody. There's no way to formulate that except for like taking this low to that high and projecting your fib extensions on that. That's all I can do, and that's how I did. That's how I did the levels on Bitcoin, and it just happened to work pretty good. Not perfectly. I mean, they went like 2,000 points above it, but it struggled at 62,000. Then recently, last week, it pumped up and made a slightly higher high, but it's struggling to hold under those highs. I would have liked to see it continue higher. So we might be seeing some kind of intermediate term high forming on Bitcoin, just as an added benefit and extra charge. Again, I'm not a crypto guy. I'm not right a lot with that. So bear that in mind. I'm not trying to tell you what to do with your crypto, but I think personally this framework here warrants the expectation of a higher high. And until proven otherwise, what's the line in the sand? This imbalance. We might be just coming back up here. And if it rolls over, then we'll be looking for a run below that low there. But I personally would expect NASDAQ to go higher, and obviously the other indices making higher highs. We're bullish as long as the averages confirm one another and they're making higher highs together. So we're getting ready to go into December. Do we get the Santa Claus rally that typically takes place when bullish markets are in force? That means the last little bit of market activity for the year, it just tends to rally into the last few days of the year. I believe that's going to be the case, especially if we get above these highs and really start to spread, with a lot of volatility. I would prefer and expect also a high forming if it goes parabolic. And what do I mean by that? Let's assume for a moment, and then we're done with this video. Let's assume that we trade above this high, okay? And we do so with 4 to 6 huge range days that are up closing on the daily chart. That's parabolic. That means they're just rushing to deliver the highest premium they can. That right there would be suspect to me. And if I owned stocks that were seeing really exorbitant price moves in my favor, I would be dumping them in that type of move, because that type of move is parabolic. That type of move is typical of a top forming. I don't see any of that in here. Okay, so to me, this looks like it's just retracing, correcting. I even told you last week that a down close or even two is constructive for the overall uptrend. It just allows the market to go down to a short-term discount, pick up more liquidity. It's interesting how they went down to that small little fair value gap there. Boom. Now we've rallied up. I'm expecting your focus, like mine, is here. Until proven otherwise, that's what I'm looking for NASDAQ 100 for the week. And obviously the Dow and E-mini S&P. So that's going to be it. I gave you a long one. And yes, my mouth is hurting. And I'm probably going to be regretting it tomorrow. But anyway, just as a reminder real quick, thank you again very much for all of your patience, allowing me to get through this surgery and still going through the healing process. For some of you that think you've been stealing for the last couple of days, and some of you have not made your payment. And to be fair, I told my staff not to remove you for non-payment because I was unable to deliver like I normally do. You didn't force this on me. It was a surgery that was elective, and I thought I was going to be able to deliver content, a day or two after that, and I was obviously not able to. And you can hear the way I'm talking because I have these big plastic things in my mouth, and it's very difficult to talk. I'm getting to that point where I can talk a little bit better now, but you pay for content and you pay for lessons. I've not been able to do what you pay me for the last week and a half or so. So because of that, and because you didn't make your payment, I'm giving that extra time to those individuals that didn't make their payment. I know some of you emailed our staff and said that you're probably not going to be able to make the payment, until the last few days of the month. That's normal. That's usually what happens with everyone. But I'm giving this till next Friday. If you obviously haven't made your payment for November by next Friday, in all fairness, I will ask the staff to take you out of the mentorship until you make your payment, but you would have to make it by December 1st to avoid being removed. Okay, I think that's fair. I think that's fair on both sides, because again, you paid, and I was unable to, not unwilling, unable to. I physically couldn't do it. So because of that, and it's something I put on myself. It wasn't like I got sick. Like I did this to myself for an improvement, and I couldn't meet that expectation that I placed in terms of what you would reasonably receive from me. So that's the reason why you didn't get thrown out yet. Okay, we didn't forget you. You didn't slip through the cracks. It's just a matter of, I want to be fair. And some of you said that you can't make the payment and you don't know when you're going to make the payment again because of your personal circumstances. You still are going to be allowed here till next Friday. But again, if you don't make the payment by next Friday, on Saturday of next week, and we will remove anyone that didn't make their November payment. Okay, so again, it was a gesture on my part to try to fill in that void that I was unable to meet as your mentor, because you paid, and now I'm giving that back in terms of the time for those individuals that didn't make that. For everyone else that did make their payment, thank you very much. I don't really know what to say. I can't give you anything extra because obviously you're already here and you're meeting the obligations that were expected of you. It was just my shortcomings because of not being able to meet the demand that I would normally have because of the impediment of not being able to do anything really, not sleep, not eat, not anything. It's been a mess, but I'm improving, praise God. And hopefully we'll be back into the groove of things on Monday. And until I talk to you then, enjoy your weekend and be safe.